Well, our view coming into the year was that the bull market would continue on the strength of a strong economy and accelerating corporate profits, but be more muted than last year because of a less friendly policy environment, particularly a somewhat more hawkish Fed, and then, of course, this so-called trade war that we're all dealing with. That's pretty much how things have played out so far, and actually I think they will continue to play out that way through the course of the year because none of those factors I mentioned have really changed. So we would expect the market to be somewhat higher at year-end, be profit-driven, but not terribly higher because those macro overhangs continue.
Headwinds, but still, I assume you want to stay along the market.
Upward bias, yes.
Got it. Andrew, what do you think?
Well, I mean, the story of this bull market is when we focus on earnings in the micro, the market does well. When we move to geopolitics, the market struggles a little bit more. I think in a week and a half, we'll get through earnings season, so it's a great time now. But as we move into August, probably a tougher time for the market because it's done well recently. It's a little overbought. But for now, it's a good time because companies are reporting good numbers.
You both like financials. So, David, I'll ask you this because, you both make the point that getting through earnings season will be an important catalyst for a lot of the sectors. The financials, for all intents and purposes, are basically through earnings season. That was not the catalyst. What was the catalyst for this group was the inversion of the yield, or not the inversion, excuse me, the steepening of the yield curve that we've seen in the past couple of days. So, David, does that make you more confident that we will see that sort of catch-up trade in financials in the second half of the year, or does that make you more, I don't know, does that make you question your position in financials at this point in terms of the catalysts that you need to happen in order for them to go higher?
Well, I think that the case for the financials is more about just the shape of the yield curve. I do actually think that we'll actually see a little bit more steepening of the yield curve over the next 6 to 9 months, primarily because we think that we're going to continue to see some acceleration in the inflation numbers. But when you look at the valuation story, when you look at the loan demand potential from what is still an accelerating economy, those pieces all fit together to, we think, positive prospects for the financials.
Andrew, what's my best investing tactic between now and year end?
Well, I think you have to, look, the market, I agree with David, it's an anemic return. The market's up 6% for the year, so that's pretty good. And so we're probably in a period where we could actually move sideways, but it doesn't mean sectors that you should be just bearish on everything. And I do think things like financials that have lagged, they could do better. So I think the trade for the year is don't chase too much momentum. If things have worked too strongly, back off, and then look at areas that haven't not done as well, like as David said, financials. I think that's the kind of the playing card for the year.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.